Hi and welcome everyone to today's presentation of G5 Entertainment. My name is Stefan Knutsson. I'm an equity analyst here at ABG, and with me today I have the CFO of G5, Stefan Wikstrand. Welcome.
Thank you very much. Thanks for having us. We'll just dive right into it. So we'll go to slide 2 in the presentation. Thank you. So G5, we are a developer and publisher of free-to-play games that are primarily played on tablets and smartphones, but also to quite a large extent on personal computers as well, and so to a certain extent on the web as well. So G5 is a global company. We operate we sell our product across the globe, and nowadays we operate through 10 offices, which has been expanded quite a bit lately due to the conflict in Ukraine. But I will get back to that more in a bit. But we operate in a global market. We have a portfolio of games that we run. Our two biggest hits are Secret Society and Hidden City, as you can see there on the slide. And we focus on a female audience of women over 35. So that is our core audience in the games that the core audience that we target with games. It's also the primary audience that we have in the games. And last year, G5 celebrated its 20th anniversary. And so we've been around for 20 years. We listed in Sweden the first time in 2006, and then we switched lists a few times and then wound up at the regulated market at Nasdaq in 2014, where we still reside. And let's go on to the next slide to have just a brief kind of market overlook. So we are primarily working then in the mobile here, which is the red, that existed before the iPhone, but obviously got popularized by the smartphone revolution, you could say, and has grown very rapidly since, and is continued to grow in the coming years. So a very strong and kind of healthy underlying market. I think in part, to me, also the red here represents the popularization of casual games, which are kind of easy games that you can play on a smartphone or tablet, for example, and that the emergence of the kind of mobile gaming scene is kind of linked together with the development of the casual game segment, which has then expanded with mobile gaming. And nowadays, you have the move between, for example, some PC games that are going into mobile, but you also have the reverse, where you have the casual gaming experience for mobile going in and taking share of the PC market. So it's becoming more and more intertwined as time goes by. Let's skip to the next slide. And just kind of a brief and recent history of G5, as I said. We've been around for quite a lot longer than this, but this one starts from 2014, when we started trading on the Nasdaq exchange. This is also a period when we did a transition of the games portfolio, so moving from unlockable or premium games to free-to-play. A large part of that transition had started, but this is kind of where we finalized that. And during this period of time as well, Secret Society was our main kind of growth driver. And then Hidden City in 2016 exited its soft launch and started growing very aggressively. And in 2017, we then had two games that had passed 100 million USD in lifetime sales. These years as well, 17, 18, 19, you could say, was also kind of investment years for the company, where we invested quite heavily on the development side of the business, where we needed to kind of expand the teams to make even better games. And this took a bit of time and effort from us. And in 2018, we only released one experimental game, which was lower than our usual kind of release cycle that we have. But then going into 2019, we started releasing games on the back of these investments. So we released 5 games in 19, released 8 games in 2020, 5 in 2021, and now 6 we have scheduled for this year. And these games are what we now call the new generation of games, and I will come back to that a bit later in the presentation. But to kind of distinguish from before and after from when we did these investments. Let's go to the next slide. So as I said, we focus on a target audience of women over 35, which is our core audience in the games. Our biggest genre is hidden object games. I referenced 2 games before, Secret Society and Hidden City, both hidden object games. Sherlock, which is one of our best growing games currently, is also in the hidden object genre, but also has match 3 elements in it. Relatively small niche in the market. We are roughly 4 companies that make hidden object games of any size. Targets our target audience really well. These are type of puzzle games where you search for an object on the screen. Yeah, it's very enjoyable, casual gaming experience, but gets more and more advanced, of course. And it's really liked within our target audience of women over 35. That also goes for the match 3 games that we have. Also a very strong genre in this target audience. Here, the competition looks completely different. It's a much more competitive landscape, but also a much bigger pie to share. So we've had good success with our Jewels of series of games, here represented by Jewels of Rome. And it's an area where we certainly will continue to invest going forward as well. And then we have our Mahjong Solitaire, or the Match 2 games, you could say, which is sort of an evergreen genre, also a bit smaller in size, but people that enjoy these types of games tend to play them for a very, very, very long time. It's also one of our oldest genres in the portfolio. And then we have the 4th bucket here with kind of new genres, which is where we kind of experiment and bring new genres to the market to test and expand our portfolio in usually a quite risk-controlled way. So we try to keep the budgets a bit lower on the new genres to test the mechanics and see if we can make it dent there in the market, here represented by our word game, Wordplay, that we released in 2019. All of our games are built with a social network in them, which is called the G5 Friends Network, where people can, when they play, they can store their progress, and they can play cross-device, so you can start on a phone and then you can play on your PC when you get home, or vice versa. But also they can befriend each other in the games. It is a social network, and you can chat and you can gift each other and items and help each other forward. For us, of course, it increases the retention, and we have another kind of touch point to the end users that we can use as well. Let's jump to the next slide. So this is an eternal slide, it seems, in our decks. But I think it's always important to keep this one to remind the investor community about the life cycle of a free-to-play game, where you can have you have the development phase where you kind of build the game in-house and you launch it to the market in usually smaller scale to see how it operates and see kind of how the KPIs develop in the game. Then hopefully you figure that out and you can start scaling the game with marketing. Marketing here is the dotted line, user acquisition as it's called. When you scale the game, at some point it will reach its peak revenue. You usually have a loss in revenue after that, and then the curve flattens out and you have a very long and steady kind of mature long tail revenue that just keeps on going. This is also where we tend to see the best profitability of the games, because you optimize the user acquisition or the marketing spend harder, and thereby increase the kind of margin potential of the individual game. And these mature titles, they keep on going for years. I think when we now published our annual report for the last year, you could see that Secret Society, for example, was our 6th biggest game last year, and that game was released in 2012. So the longevity is usually a bit underappreciated when you look at mobile gaming and how long time they can actually yield a very good return, and how long you can keep them in the portfolio. And then in the end, when they become too small, we put them in what we call harvest mode, which essentially you pull the teams, you reduce the marketing to essentially zero, And they're very small but profitable cash cows, and they just stay on the stores, and people organically can find them there. Yes, let's move to the next slide. So I mentioned the new generation of games, once again defined as games that we have released from 2019 and onwards. And this part of the portfolio is only own games. So we do licensed games as well, where we license games from third parties, which is a part, has been a part of G5's business model since going into mobile, or even before that. So that certainly is a part of it, but we invested in the workforce to actually start moving the revenue on this new generation of games, which then we're initially launching the first ones in Q2 19. And since then, we've seen a very strong growth from these new generation titles. And so we've released 18 so far. We have 6 new coming as well. You can see on the chart there that we had a 19% year-over-year growth, which is very good. Especially Q1 market-wise, it was a bit weaker quarter. So very strong performance of this part of the portfolio. In the new generation of games, we invest in all genres that you saw on the previous slide. So primarily then the 2 biggest for us being hidden object and match 3, but also in the mahjong, and also experimenting a bit on with new mechanics. And this is now our biggest subset of the portfolio, and account for more than half of our revenue. In Q1 as well as in Q4, we highlighted the game called Sherlock that we have in the portfolio, which is our best growing game currently. And that game grew 25% sequentially, so 25% from Q4, so a very strong performance. In this kind of growth that you see in these new generation games, it's also important to keep in mind that marketing is an important part here. And the last years, we've also invested heavily in the marketing department, both in terms of tools and people and whatever they need to succeed in a very competitive landscape, which is the mobile kind of, or the casual gaming scene. Let's move to the next slide. So just looking a bit at the financials. So if we look at then at revenue, once again, the orange is the new generation of games, which then has grown consistently over, since we kind of started launching games in this category. We have the yellow, which is our own games, so G5's own games, but the older ones, which are losing a bit of revenue due to their, age. And then we have the licensed part as well, which then contains our biggest game, Hidden City, which is also losing a bit of revenue, as described on the previous slide, where you have this kind of, you lose revenue and then slowly but surely the curve flattens out. So overall, the top line hasn't grown the last year, but the mix is much better, which you can see also on the gross margin then, where we have more revenue coming from own games versus licensed games. Where really licensed games we need to pay royalty on, and we don't do that for our own games. And you can see a constant upwards pressure on the gross margin over the years due to a better mix. We saw a bump in Q3, Q4 this year, which was related to Microsoft lowering their store commissions. But then in Q1, you still continue to see that trend from the improvements in the product mix, rather than the one-off effect that the Microsoft store had on the gross margin numbers. So very positive development there, and that of course then improves the future kind of operating margin ability for the group. And we've also seen a very good positive trend in EBIT margin over the last years, thanks to very efficient user acquisition, improvements in the product mix. And we continue to have a very strong balance sheet. So we ended the quarter with almost 190 million SEK in cash. We have no debt. We've consistently done buybacks and paying dividends at the same time as we invest in the portfolio and in marketing for the games. So a very, very healthy position to be in there. If we then move to the next slide. So, a very, very sad topic for us, obviously, but when this war started in Ukraine, we had more than half of our employees in Ukraine, and the majority of the rest in Russia. So obviously this has had a quite big impact on the company. I would say, even though the war is ongoing and it's horrendous to read about it, we are more or less back to where we were pre-war in terms of efficiency and work hours. We are a different company, but we've gotten through this quite well. And part of it is due to the efforts that we made towards the employees in Ukraine early on in the conflict. We allow them to, well, first and foremost, not work, to put themselves and their loved ones in safety. We provided them with financial support, compensation for relocation, housing, etc. We've been running campaigns in the games to support Ukraine, and we've done charity and etc. etc. So it's been, of course, very hectic for a lot of our employees, and parts of the people that are working with these support areas, they are also from Ukraine. So of course, a very tough situation in many aspects, but I think the company has come through it quite well. So we took a one-off charge in Q1 of 15 million that will cover the expenses that we have incurred and the obligations that we have made for the rest of the year towards the staff. We've done some other things as well in terms of not offering games in Russia and Belarus, etc. And we're actively kind of relocating people out of Russia to reduce our footprint there. Which brings me to our next slide, which is how the office structure looks today. So previously we had offices in Russia and Ukraine, which were the biggest ones. We have our office in Sweden, Malta, the United States. We have, since the war started, we've opened offices in Georgia, Armenia, Montenegro, and Poland. We are hopefully finalizing Bulgaria and Turkey soon as well. And these are primarily for relocation purposes initially, but it also opens up a new talent pool for the company and provide kind of more opportunity to hire people in these new markets. But a big change though, and likely more countries will come as well as we kind of progress in these expansion packs that we bring to the company. And then we move to the next slide, which is also the final one. So as we mentioned in the report for the second quarter, one important part of that was that, well, apart from the war and the efforts we made and how it has impacted the business, we also communicated that we will temporarily increase our user acquisition spend on our best performing games to try and boost growth. And this is then planned for May, June, and July, so will impact Q2 and in part Q3 as well. In Q2, we expect user acquisition could go up to 35% of revenue, which is a significant increase towards the 17 to 22% range that we have communicated. We've been more or less stable at around 20% the last 2 years almost. So a significant change there. But as we see good potential for the games in the portfolio, and then it only makes sense to try and boost that growth. We'll see, we will come back, of course, after July. Then we have in early August, we have our Q2 report, and we will come back to this in more detail then, as that boost that had been going on for 3 months. But as I said, the goal is to bring revenue on a higher level. Obviously, that also with an improvement in the product mix, it improves the gross margin. Also, the margin potential then is improved twofold. One, due to higher gross margin, but also due to the operating leverage of the business that increases the margin potential. We are more or less working at capacity with all teams and projects that we intend to do. We've actually released 2 new games just recently out of the 6 that we had communicated. So no significant delays have occurred due to the war, and we expect that to continue. And yeah, we can't say enough how grateful we are to the employees, and just give them every shout out that we can on their amazing job under horrendous conditions, and just hope that that situation will improve for them as well. But we're ever so grateful. And I think that concluded my presentation.
Thank you very much, Stefan. I would like to go in first on your increase in investments. You said that you're targeting an increase here in starting from May, mostly targeting your new game Sherlock. Can you just tell us what are the similarities and differences between Sherlock and your other big game, Hidden City? And do you think that Sherlock can become as big when it's fully matured?
Well, I think they come from slightly different paths, but it's still hidden object games. We know that there is a market out there for hidden object games. You can see that from our own performance, but also other companies where you have a very attractive title. You can grow that, and the growth of the title can actually expand the genre as a whole. Hidden City in 2016 came out of a soft launch period that took 2 years. It was very right in the market, obviously. We saw really good KPIs, and they decided to pounce on that and really kind of invest hard in the game to, well, bring it to its full potential. I think in that sense, Sherlock has a slightly different, it has grown very consistently since release, but of course there's new content that needs to be added to the game to, have a kind of a full game in that sense. The KPIs look good. We think that we have an opportunity to scale the game harder, and that is essentially what we do. And in that sense, it's similar, even though the times are very much different, because so much has happened in the mobile gaming space the last 6 years then. So there are of course a lot of similarities, but also differences.
And if you look
the final part of that question, if it can reach the size of Hidden City, I don't see why it couldn't. But we will live to see. Now we at least give it a chance to really grow, and we'll see where it takes us. If the results are, as I said, we'll come back after the Q2 report and talk more about that, and if we can continue scaling it as aggressively, if we take another route strategically, scale back a bit to do it in another manner, or let's see. But I don't see why it couldn't be Hidden City or better.
And you have released quite a few fully developed games from your own last year and also this year. Is Sherlock where you see the strongest KPIs, or do you have any other titles that you also think have a bright future?
Well, I think it kind of, given that Sherlock has been the best performer the last quarters, 2-3 quarters, I think the easy conclusion is that it is the game with the best KPIs, and that we will run with that primarily. But of course, we see potentially in other titles, but at this point, Sherlock sticks out.
Perfect. And then if we look, the sales decline from Hidden City has not been fully covered by the growth in your own games this far. When do you expect this crossover to be, and you can see organic growth again?
Yeah, initially when you see the kind of first drop in Hidden City, then that is tough to cover as well. In 2018, when kind of Hidden City reached its peak, we also were in this investment phase, so we didn't have really a new portfolio that we could bring to the market. I would say from Jewels of Rome being the first new generation of game that came out that grew really well. Since then, we've more or less covered the loss in the older game portfolio, including license and then specifically Hidden City. I certainly hope that we are in this kind of breaking point where we stand. Usually the kind of pace of decline, and you can already see that on Hidden City, that it kind of levels out. Hopefully it will be even more level going forward. And then if we bring growth to the other part, then primarily the new generation of games, well, then we should be able to translate that into to the kind of full top line growth. But in the meantime, we're quite pleased that we're at least growing where we should be growing. We increase the margin potential, and then it will come.
And finally, do you see that your accelerated investments will hold you back in terms of buybacks in the near future?
Well, luckily you can always move that question to the board, which is where it kind of belongs. But buybacks is a tool that we enjoy. I think I can say, and we've used it actively before. I don't see why we wouldn't do that going forward, depending on what opportunity the market gives us. If it's going to happen in the coming month, that is something that I won't kind of comment. But as a mix in the kind of capital allocation, we think it's really good for the shareholders.
Perfect. Then I would like to thank you, Stefan, for coming and presenting with us today.
No, thank you. Thank you for having us. Thank you.